Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are live with another episode of the Real Estate Investing Club. Today we have Jake Gardner with us. Jake is an experienced entrepreneur and executive with 15 years experience running and selling businesses, and he is now focused on opportunity zones. So I'm super excited to have you here, Jake, and talk a bit about opportunity zones. How are you doing today?
Yeah, thanks for having me.
Absolutely. To get us started,
Things are great.
Perfect. It seems like there's a little bit of latency in our conversation. So if we talk over each other, it should be okay. To get us started, why don't you tell us a little bit about your story? How did you get started in real estate in the first place?
Sure. So I started in real estate actually in 2008 and 2009.
Perfect timing.
Right as the crash was starting and going, crashing. I started in digital advertising, and my dad had an opportunity to buy, coincidentally enough, mortgage-backed securities and get some cheap financing. And I was like, I think that's not. I think everything is going bust. And he's like, no, let's check it out. So. We actually purchased 5 or 6 single-family homes down in Austin, Texas. And I was living in New York at the time. My dad is in Los Angeles. And so we purchased those homes, and we've held them on, I guess, for like almost 12 years now.
Oh, wow.
And so I started there and built my career up actually in digital advertising, and I recently sold a business in the digital advertising technology space. And so I was really focused on technology. And then after I sold it, I was looking for a different type of business. And, real estate was obviously one of the business I was looking at. And I was also looking at something called opportunity zones. And that's kind of where I've landed now, where I'm looking at real estate and this cool new program called Opportunity Zones.
Awesome. Yeah, I love it. So sounds like you got started, a while back. So you've had some experience. How many houses did you guys buy in 2008, 2009?
So in 2008, 2009, we bought five houses.
And you've held them since that point. You still have them in your portfolio. That has to be some
portfolio.
This is going to be fun because we're gonna talk over each other with the latency. So for people listening and watching, you can just watch us battle it out a little bit here. But yes, so you got the houses. You got 5 houses, 2008, 2009. You still have them in Austin, great market. So I'm sure you've experienced some quite a bit of appreciation there.
Yep, the houses are doing quite well. And then in 2000, I want to say 15 or 16, I started investing in a place called Southern Utah in St. George, Utah. And so I looked into investing in some commercial spaces over there, and then looking into multifamily, and then also looking into some land development projects there.
Very cool. So let's dive into opportunity zones. I mean, that's what you're here to talk about. That's what you focus on. First, for people who are not aware of what an opportunity zone is, can you just kind of explain it to us? Explain, nuts to bolts.
Sure. Yeah. So an opportunity zone, or the Opportunity Zone program, was passed by Congress in the 2017 Jobs Act. And it's a bipartisan bill that I think even in the Obama administration, they were working on it. And it's a community impact type of tax incentive program. So across the United States and Puerto Rico, there are designated zones. Each state designated a specific area, or specific areas across the state, which was economically depressed. And the goal was to stimulate the economy or that area. And so it's a social impact program. And then for investors, the goal was to have investment dollars in those areas. And so if investors have capital gains, they can put their money into opportunity zones, and they get a variety of different tax incentives, some deferring the taxes. That's some of the incentives. And then in some instances, you can actually eliminate your entire capital gains investment.
Wow, that's fantastic. So can you get kind of this is your specialty. So run us through a specific project that you've done, and kind of how did that look compared to if you had bought that same property outside of an opportunity zone?
Sure. So the way it started was, or the way I started to understand it was, I had learned a little bit about 1031 exchanges. So, as I mentioned, we had purchased some homes in Austin. We were thinking about maybe we'll sell them. I purchased some property in St. George, Utah. And so I learned a little bit about 1031 exchanges. And then I had this other business, and I had this big liquidity event. Right? I made a bunch of money, and I had a huge tax burden. So with the 1031 exchange, as I'm sure most of your listeners know, it's a like exchange, right? You can buy real estate and buy some more real estate. With an opportunity zone, it's any capital gains. So I can sell a business, or I can sell stock, or I can sell real estate, and I can actually put it into an opportunity zone.
Huh, interesting.
And so once that occurs, I was like, oh my gosh, wait a second. I just sold my business. Let me put it in an opportunity zone. So the first incentive for investors is take your capital gains, and that's any kind of profits, and you're able to put them into an opportunity zone. Just a side note, opportunity zones include real estate, but they also include businesses. So if you have a business in an opportunity zone, that can also qualify. So for our first project and for my fund, what we did is I sold my business. I put my money into you have to put it into an opportunity zone fund. So I put it into the St. George Opportunity Zone Fund. And then the Opportunity Zone Fund can actually go and purchase businesses, what they call a QOZB, or I forget, it's not, maybe not QOZ RB, but it's basically QOZ real estate, Opportunity Zone real estate. So I'm able to defer my tax basis until 2026. That's the first incentive I get. And then within our fund, within our project, as long as I hold the money in the fund for the next 10 years, anything we buy and sell within the fund is going to be tax-free. Well, that's the overview of the program on the tax side. And just, there's a lot of nuances into the whole thing. There's a couple of different things that you need to do to ensure that, the real estate becomes qualified in the QOZB. So what that means is I just can't buy and sell real estate in an opportunity zone. I actually have to do some substantial improvements to the real estate in order, and that's where the social impact and the community impact actually really comes up.
That's interesting. So I'm coincidentally, I'm actually looking at a 12 unit apartment building out in Cincinnati that's in an opportunity zone. It just so happened to be in an opportunity zone. I didn't search it out. Um, but I saw that. I saw it was part of an opportunity zone. So I've gotten kind of interested in it. So in order to get any benefit from buying that particular property, I would actually need to go in and fix it up, do some, is it capital improvements or what other types of improvements can you do to qualify?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, again, they've changed some of the rules and there's very specific nuances, but it's building improvements need to occur, and you need to improve the building up to the value of what you paid for the building, minus the land. So if you bought something for $1 million and the land value was $200,000, you actually have to put another $800,000 into the building for it actually to qualify.
Oh, wow. That's quite a bit of capital improvement there.
Yeah, definitely. So, with a lot of the opportunity zones, the first challenge is actually finding the project. The second challenge is making sure you understand how to improve a project. It's not every project is going to be approved or qualify for the zone. And so when I started my fund, I'm not a pure real estate person. I partnered with some people who were developers, contractors. They had done management, and so with our St. George Opportunity Zone Fund, my focus was really to find experts in the field, people who have done this before, to ensure that you follow the rules in the most appropriate fashion. And you have some time to do it. There's the government is interested in making sure this program works, but there's all these little different tricks of the trade to make sure that the project is actually a qualified project.
Yeah. It sounds. It sounds like it's a little bit more complicated than it would seem. This property that I'm looking at definitely would not qualify because I don't think I could put the purchase price back into it. Maybe I'll just add like gold plating to the doors and stuff to to add the value there. But so very cool. So what do you have? What areas are you looking at right now? And then what type of properties are you guys chasing after?
Yeah. So in the St. George Opportunity Zone Fund, we're looking specifically in Southern Utah and St. George. Mm-hmm. And I've looked at a variety of different other projects. Again, when I sold my business, I became an investor, an opportunity zone investor. So I've looked at 25 or 30 different funds. The key is to know that not every fund, not every opportunity zone is the same. So there are certain areas that it works for, certain areas it doesn't work for. And so, we're focused on St. George. We'll look at any type of property if we can fulfill those criteria. Again, there's a lot of different nuances. So, there's the real estate side of things, and then there's the tax side of things, and then there's the legislation part of things. So there's some rules that had changed because of COVID. So this is not to say it's undoable, but it's a highly complex, or there's a lot of moving parts. And so when we look at projects, we're looking at commercial, we're looking at multifamily. Um, the most when I was doing a lot of research, most of the funds will do ground up development because that's the easiest way to get that substantial improvement. But again, there's plenty of people who know what they're doing, or there's, I don't want to say plenty, but we happen to know what we're doing. So if you can find the right projects, you can actually substantially improve them. But most of the projects are ground up development for that substantial improvement reason.
Yeah, that would make sense because there are a few. Well, they're out there, but there are a few commercial multifamily properties where you can put, double the amount of what the property's purchased for back into the property. So ground up makes a lot of sense. Why did you guys go specifically for St. George?
So I had known my partners for a couple of years, and they happen to live there. And it's one of the fastest growing metros in the United States. It's a great place to retire.
Really? I've never heard of it.
And it's actually 2 hours outside of Las Vegas. It's about an hour away from Zion National Park. And with COVID, it's an interesting place to live. When I first heard of it, I had the same reaction. I've never heard of that place, and then I started to travel there, and I was like, wow, this is really, really nice. And so it's a nice retirement community. I think there's like 9 or 10 different golf courses. There's a growing college community. It's a nice place to raise family. And, my partners are local, which is, another thing that I really valued because, being a non-local investor is fine. And I'm sure it's key to have the right teams on the ground. And so that's, for me, especially in this highly nuanced, highly specific type of project, I wanted to make sure that, the guys know what they're doing.
Yeah. It sounds like you really, really got a boon there by finding partners who are, specific to that area. And so the right partnerships can definitely make any deal not easy, but easier for sure. So are there other opportunity zones in America? I know you really like St. George because you have that boots on the ground, but are there other opportunity zones that you've kind of eyed, just, think that the numbers there look pretty attractive?
There's a variety of places. It's across all the states. So every, it's a highly localized type of real estate play. So I live in Los Angeles. There's certain areas in LA that we're all kind of shocked that they're in opportunity zones, which is a really, I guess, good thing.
It's always all the opportunity zones are always in lower, economically depressed areas. Is that correct?
That was the goal. So in 2000, they did the census. They took the numbers and they divided up the zones by the 2010 economic census. So we took a look at St. George. In 2010, after the crash, it was really hurting, but it started to come back up. So that's one of the other reasons I selected that area. It coincidentally enough, most of Puerto Rico happens to be an opportunity zone.
Huh, didn't know that.
Yeah. And, I was talking to someone in private equity last week, and I was explaining to them about the Opportunity Zone program. Again, like I said, it's businesses as well. I know this is a real estate podcast, but, some of his businesses happen to be in opportunity zones. That's just where their headquarters are. So it's a kind of wide ranging program. And there's a variety of different maps. If you go into Google, say opportunity zone map, and you type in your address, it's pretty interactive, and you can find if your project is in or near an opportunity zone.
Cool, man. Well, very cool. We're nearing the end of the episode here, so I got to push us out. But thanks for hopping on and talking about opportunity zones. It's a topic we haven't broached here on the Real Estate Investing Club yet, and I'm glad we had you here to talk about it.
Yeah, just one other point, for most real estate investors, especially if they're doing 1031s, this is an alternative to 1031 exchanges. And again, I don't think we have enough time to go over that, but it's something that I would encourage a lot of real estate investors to take a look at as an alternative to 1031 exchanges. The way the profits work and the way the distributions and we've had some investors come in and say they kind of ran out of time on 1031s, and that could be another idea of where to put the capital gains if it's necessary or if it's needed for them.
Interesting. Yeah, I'm actually doing a 1031 right now, so maybe I'll have to look into that. Cool. So we're going into the quick question round, and this is really easy. I'm going to ask you some really specific questions. You just give your quick answer and response, and we'll go from there. Starts with books. I'm a bookie, so tell me, what is one book recommendation you could give for either business and real estate, and one book or recommendation you can give for life wisdom?
Sure. So for real estate, I actually picked up Grant Cardone's How to Invest in Real Estate.
Okay. It's good.
And it's really, really good. It's a small book, about 150 pages. And just, the way he breaks things down number wise, I really like it.
All right. Sounds good. How about general life wisdom?
So general life wisdom, I'm reading a lot of books right now about the Napoleonic era.
Oh, interesting.
And so, I like to compare and understand a little bit more about history. And so I've read the life, no, I think it's called The Life of Napoleon. But just understand, it's a huge book, and, some of it's, historic, but just understanding the times of that era and understanding their lifestyle, to me, it's very life impacting.
Yeah, no, Napoleon, his life is just so fascinating. It's really interesting for sure. Moving on, next question is about habits. Habits are the foundation of our life. So if you could pinpoint one habit that you kind of feel has made the most impact in your life, what would that habit be?
I take a 20-minute nap in the middle of the day.
Man, that is awesome. You're the first person to say that. I do the same thing, though. I one up you with 30 minutes. So I'm glad you say that, because when we were kids, we all took naps. I don't know why we went away from it. Naps are the best. Great habit though. I like that.
Yeah.
Next question is your younger self. So if you could go back to the Jake who was just starting out 2009, buying those houses out in Austin, go to that Jake, grab him, look him in the eye, and give him one piece of advice moving forward.
Invest in more real estate. We had an opportunity to my dad, and I, we started doing this, and he said, we can do this in a bigger scale. I was like, what does that mean? And he said, we could buy 100 or 200 houses. And the Austin market was starting to get hotter during that time frame. And I was like, I'm going to stick with this advertising thing. It worked out for me, but on the side, I would have wished that I could have shook myself and said, hey, keep going on, keep buying more houses, buy more.
Especially in Austin, man. If you had 100 houses in Austin, whoo, doggies.
Yeah.
All right. Next question is tools and apps. I think we have too many tools and apps in our life, but some of them actually do help. So what is one tool or app that you feel actually helps your life?
One tool, I would say I listen to Audible.
Good choice.
Not only that, at a certain point, like I said, I read a lot of, or I listen to a lot of books on history, and so I picked up another Napoleon book. It was about 1,000 pages. It was like 30 hours. As I listened to it on 2.5 or 3 speed, and so I got through it in 10 hours versus 30 hours, which I don't know how much I retained, but I really like that feature.
Yeah, me too. I do the same thing. I don't go to 3x, but I think I do. It was like 1.75 or something. And it just kind of makes it all go a little bit quicker. I kind of like that. Next question is, it's time for you to brag. I want you to brag about yourself. What are you absolutely kick-ass at? What is your super strength?
Organization. I am a file organized process person. And if I can't scale it appropriately, again, one of the reasons I'm kicking myself on that Austin deal, I build systems to make sure that, if I do 1 or 2 or 3 deals, that it can jump to 30 or 50 or 300 deals. And my goal is constantly to figure out a way, a system, a process to make sure that I can expand exponentially.
I love it. Processes are key when you're growing a business for sure. Final question, and this one is just for the listeners. You've given us some really good advice, some really good wisdom on opportunity zones. So I'm sure there's people out there who want to get in contact with you. So what's the best way for them to reach out to you?
Yeah, you can visit our website, stgeorgeopportunityzonefund.com, or my email, jake@stgeorgeopportunityzonefund.com. I'm available through there. You can look me on LinkedIn, Jake Gardner. I have my phone number on there. And I'm sure you'll put it in the show notes. But any way possible, I'm more than happy to chat.
Perfect. Yep. And you are right. We are going to stick that URL in the show notes. So if you guys are listening and watching and you want to get in contact with Jake, click the little more in the description on this episode. It'll pop down the show notes, and then you can click through to his URL there. So Jake, thank you again for hopping on the show. Had a pleasure. It was a pleasure talking to you. For everybody who is here with us today, thank you guys for showing up, because we couldn't do this without you. Again, the best way to support the show is just to subscribe, like, and share this episode with your friends and family. Other than that, I hope you guys have an absolutely kick-ass week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your business to the next level, I've created an ebook just for you, available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects.
We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.